Welcome to Talk Tickers, where we dive deep into earnings calls to bring you the crucial insights for your investment decisions.
And today we're dissecting the J&J Snack Foods fiscal 2025 second quarter earnings call.
Let's jump right into the headline numbers. What did Q2 look like?
Okay, so for Q2 fiscal 25, net sales landed at $356.1 million. That was actually down slightly 1% year over year.
Down 1%, okay. And profitability?
Yeah, that saw a bigger impact. Gross margin fell down to 26.9%. Adjusted EBITDA, that came in at $26.2 million for the quarter, and adjusted EPS was 35 cents per share.
So definitely some pressure there on the margins and earnings.
Yeah.
But I gather management sounded somewhat positive looking ahead.
They did, yeah. Despite these results, they expressed confidence in, an improved second half of the fiscal year.
All right, let's unpack that. How did the different parts of the business perform to give them that confidence? Maybe start with frozen beverages.
Sure. So frozen beverages, sales dipped just under 1%. The main drag there was the theater channel.
The movies.
Exactly. They pointed to underperforming movie releases during the quarter. Plus, there was an unfavorable foreign exchange hit from a weaker peso.
Right, that affects international results.
Yeah, and they estimated North American box office sales were down maybe 10%. So specifically within that segment, beverage sales themselves dropped 7.1%, and gallons pretty much followed suit.
And that volume loss hits margins, I assume.
Definitely. Lower volume hurts, and then the FX impact on top of that. But they did see a sharp improvement early in Q3.
Oh, really? What drove that?
They linked it directly to the Minecraft movie doing well, so that, plus optimism about the summer movie lineup, is giving them hope for a rebound.
Makes sense. Any other points on frozen beverages?
Well, interestingly, while the actual drink sales were down, the maintenance and machine revenue side was up. Maintenance up 4.2%, and machine revenue actually jumped 17%.
Okay, so some resilience on the service and equipment side. Now, what about food service? That was also down, right?
It was, yeah, down 1.7%. The biggest reason was the absence of a limited time offer, an LTO, for churros they had last year.
Right, those LTOs can create tough comparisons.
Exactly. That LTO last year was apparently a big hit, so churro sales were down significantly this quarter, like 18.7%. They added some new churro volume, but it just didn't fill that gap.
Wow, almost 19% down on churros. Anything else in food service?
Pretzel sales were also down 7.9%. Again, hit by the theater weakness, like beverages, maybe some just general market softness.
But wasn't there a silver lining with pretzels?
There was, actually. They mentioned gaining market share, particularly in Bavarian pretzels, which is a key focus area for them. So even though the category was soft, they seem to be doing relatively well within it.
That's important context. Any other pressures in food service?
Yeah, the big one, input costs, especially chocolate, hitting their bakery business. They took some price increases, but it sounds like not enough to fully offset the inflation.
So more price hikes coming.
They indicated further selective increases are planned for Q3. It's a balancing act,
Absolutely. Okay, so challenges in beverages and food service.
Yeah.
But not everything was down.
No, definitely not. Frozen novelties were a bright spot. Sales up 4.1%.
And it's mainly Dip'n Dots.
Primarily, yeah. Continued success there, rolling out into more theaters, broader penetration. That brand seems to have real momentum.
Good to see. And retail.
Retail also grew, up 1.8%. And within retail, frozen novelties were the star again, up a strong 14.7%.
14.7%.
Yeah.
Wow. What's driving that?
A lot of it is their Dogsters brand, pet treats, apparently gaining significant market share, and also the launch of Dip'n Dots sundaes in retail.
The take-home version. How's that doing?
Pretty well out of the gate. They said it hit $1 million in sales during the quarter, and they're still expanding distribution. So retail is definitely a strength.
Okay, that's a clear positive.
Okay.
But you mentioned handhelds earlier. What was the issue there?
Right. Handheld sales were down. They said it was mostly due to temporary capacity constraints.
Constraints? Why?
It stems back to a facility fire they had late last year. So they're working on supplementing production, and they do expect some insurance mitigation on the financial side.
Got it. So summing up the quarter story, it sounds like theaters, that missing churro, LTO, cost inflation, and some FX were the main headwinds.
That's a good summary. Short-term pressures, definitely.
But the optimism for the back half rests on theaters bouncing back, price increases kicking in, and continued growth elsewhere.
Very much, yeah. They expect theater traffic to rebound, those planned price increases to stick and help margins, and volume growth overall.
And they mentioned other positive developments too.
They did. Things like new customer wins. They highlighted Urban Air as a new major Dip'n Dots customer that should help drive growth.
Nice.
And innovation is still a big focus. They talked about enhancing the super pretzel recipe and packaging for retail, kind of leaning into that Bavarian pretzel trend.
Smart, aligning with what's popular.
Exactly. And they're testing other things too, like potentially getting a churro onto a QSR value menu. That could be huge volume if it works out.
Interesting. So trying to find new avenues for existing products. Are they also looking at broader consumer trends, health and wellness, that sort of thing?
Absolutely. They specifically mentioned developing options like higher protein pretzels and adding things like electrolytes or probiotics to some frozen novelties. So definitely trying to adapt the portfolio.
And financially, they seem stable? Balance sheet, okay?
Yeah, they highlighted a healthy balance sheet, cash on hand, borrowing capacity. They even bought back some shares during the quarter.
Okay, a sign of confidence. So looking ahead, what's the strategy and guidance?
The focus is really on driving volume, getting those selective price increases through, and bringing innovation to market in the second half.
And margins. They expect improvement there.
Yes, they're aiming to get gross margins back towards the low 30s in the back half, driven by that pricing, plus growth in the higher margin frozen beverage and retail segments, hopefully.
What about costs like distribution?
They expect distribution costs to settle closer to 10% of sales in Q3. And they also mentioned actively working to mitigate potential impacts from tariffs on inputs.
Right. Always something to watch. Okay, so stepping back, for an investor listening to this, what are the key things to really focus on?
Well, first, that reliance on the theater industry, it clearly creates volatility tied to movie slates, something to watch.
Definitely.
Second, the strength in retail is undeniable, especially frozen novelties and Dip'n Dots. Shows strong consumer pull there.
Agreed.
Third, the food service challenges really highlight how specific customer deals like that LTO can swing results year over year.
Yeah, lumpiness.
Fourth, keep a close eye on input costs, especially chocolate, and their ability to manage that through pricing for margin recovery. That's crucial.
And finally,
just their proactive approach to innovation, catering to health trends, adapting. It suggests they're thinking ahead, which is generally a positive sign.
great summary. All right, let's shift gears. Time for our This Is Not Financial Advice segment. Let's brainstorm some outrageous but plausible trade ideas based on this call.
Okay, I've got one, playing on that theater rebound theme. What about going long J&J Snack Foods while simultaneously shorting a basket of streaming service stocks?
Ooh, interesting. Tell me the thinking behind that one.
Well, the thesis is simple. If summer blockbusters really draw people out, like J&J hopes, that directly boosts their high-margin theater sales.
Yeah.
Popcorn, pretzels, frozen drinks.
Right.
Conversely, if people are out more, maybe, just maybe, that slightly dampens enthusiasm or growth for staying home and streaming. It's a play on shifting entertainment habits out of home versus in-home.
I like it. Betting on the return to experiences, benefiting the supplier J&J while potentially seeing a slight headwind for the stay-at-home place. Okay, that's one. Got another.
How about this one, focusing on those input costs? Go long cocoa futures, but also take a long position in J&J Snack Foods.
Long cocoa and long J&J. Explain that one. Seems counterintuitive given the cost pressure.
Yeah, it's definitely higher risk, maybe a bit contrarian. Management explicitly called out chocolate costs as a headwind.
Right.
So the idea is if cocoa prices stay high or even go higher, hence the long cocoa futures position. But J&J proves they can successfully navigate this through price increases and efficiencies. Then maybe the market is underestimating their ability to protect or even expand margins despite the high input cost. If they execute well and maybe cocoa eventually stabilizes or pulls back from peaks later, they could see a really nice margin tailwind.
I see. So you're betting on both continued high cocoa prices or hedging against them, and J&J's ability to manage that specific pressure effectively, potentially better than the market expects.
Exactly. It's a play on commodity trends coupled with strong company execution in the face of that specific challenge. Definitely not for the faint of heart.
No kidding. Two very different thought-provoking angles there. And we absolutely have to stress again, these are just speculative ideas, not financial advice. Do your own research.
Couldn't agree more. Always do your homework. So wrapping up our deep dive on J&J Snack Foods Q2 call, we saw a company facing some near-term hurdles, mainly tied to theaters and costs.
But showing good strength in retail and frozen novelties and expressing clear optimism for the second half based on recovery, pricing, and innovation.
That sums it up well. It'll be interesting to see how factors like the summer movie slate and those price increases actually play out in Q3 and Q4.
Definitely. What were your key takeaways from this call? We'd love to hear your thoughts. Join the conversation. And thanks for tuning in to Talk Tickers.